Hi students, how are you all? Hope you all are doing well. So many days you have enjoyed your holidays. Now it's time to concentrate on your studies also. So our school management has decided to conduct online classes for you. So I am the one who is going to handle commerce and accountancy. Today we will start learning accountancy. Okay. Now we will move on to the first chapter. Here in 12th standard we have 10 chapters. I have not removed any chapters from this 10. The 10th one we can remove, I think, but because all the others are very important. So we will start from the first chapter. The first chapter name is Accounts from Incomplete Records. So before we go to enter this chapter, Accounts from Incomplete Records, let us recollect all the things that we have learnt in 11th standard about in accountancy, especially all the accounting principles, concepts, standards, everything. Especially the accounting concept, dual aspect concept, business entity concept, going concern concept, matching concept, etc. Okay, the dual aspect concept. Dual aspect concept is, do you know anything about dual aspect concept? From the name itself, there are dual aspect means two aspects. Two aspects we have for each and every business transaction. So we record in the books of accounts, we have to enter the debit and credit aspects of a transaction. That is the thing. Then from this one only we derive the golden rules of accounting. I think you all know the golden rules of accounting very well because we have learned it very thoroughly. So in the accounts, there are three accounts, isn't it? What are the three accounts? Personal account, real account, nominal accounts. And what should be debited and what should be credited in these accounts? In personal accounts, debit the receiver and credit the giver. Then in real accounts, debit what comes in and credit what goes out. In nominal accounts, debit all expenses and losses, credit all incomes and gains. These are the golden rules of accounting. Without this, we cannot do accounting. You might have understood this golden rules. So, with this principle or with this concept, with this rule only, we prepare the journal entries for the transaction. We know what is transaction, all the business transaction. For example, buying, selling, giving money, getting money, all these are called business transactions. So we prepare that journal entries with the help of these accounting rules. From the journal entries, we post these journal entries in the ledger. Then after posting all the journal entries, what we do? We balance them. And from the balances, we prepare one account, one statement that is called a trial balance. So from the trial balance, we prepare the final accounts. That is called finally we prepare the final accounts. So with this one you have to keep in your mind. So this is called double entry system because we enter the double aspect, dual aspect of a transaction. So at last when you prepare the balance sheet total will be tallying. That is called double entry system of bookkeeping. They maintain all the books of accounts under double entry system. So now you come to the first chapter, Accounts from Incomplete Records. So what's the title of the first chapter? Accounts from Incomplete Records. So what's the meaning of this one? So when accounting records are not strictly maintained according to the double entry system, these records are called incomplete accounting records. Double entry system, you know, we enter both the aspects of accounts. Here we enter any one of the aspects or both the aspects are partially omitted. So here we enter only two accounts, cash account and personal accounts of customers and creditors. Here some transactions they record fully. That means the debit and credit aspects of transactions. For example, we can say the cash received from customers, they enter in the cash account and in the personal account of the customers. And then cash paid to creditors. So this one also will be entered in both the accounts, under cash account and in the creditors account, particular creditors account. Then another explanation is some transactions are partially recorded. Either it may be entered in any one of the account. For example, the expenses paid or the salary paid for someone. This salary paid will be entered only in the cash account, not in the salary account. Have you understood, students, now the meaning of accounts from incomplete records? When accounting records are not strictly maintained according to the double entry system. These records are called incomplete accounting records. So, some transactions will be entered fully, some transactions are entered partially, and some transactions are omitted completely. That some transactions, for example, depreciation will be omitted entirely, because this depreciation we prepare the adjusting entries that we studied in the last year. Adjusting entries, these adjusting entries are not prepared in this small trading concern. Who will prepare this one? This accounts from incomplete records. Usually it will be prepared by the small sole trading organizations and by partnership firms, because the joint stock companies, you might have studied in 11th standard in commerce. Joint stock companies are run in large scale, even by government or by individuals, the rich people, one who can afford to invest in large amount. So these joint stock companies are compulsorily asked to prepare accounts in the prescribed form under double entry system only. They cannot prepare. We can call these accounts from incomplete records as single entry system also, because it is the opposite of double entry system. We can say single entry system. Till last year we have learnt as single entry system only. Only in the new book they have printed as accounts from incomplete records. They have given a new name. So we can call it as single entry system also, because it is incomplete and unscientific way of bookkeeping. So these joint stock companies are asked to prepare the accounts under double entry system only. There is a section given, section 128(1) of the Indian Companies Act. They have to compile with this provision of the Companies Act 2013. So this accounts from incomplete records or single entry system can be followed by only the small scale or small sized sole trading concerns and by partnership firms. Okay, students, you might have understood the meaning. Now shall we learn the features of this single entry system or accounts from incomplete records. The first point is the nature. Before that, what is the meaning of features? Another name for features. They may ask a question, characteristics of accounts from incomplete records, or the features they can ask. Okay, so the other word for feature is characteristics or characters of accounts from incomplete records they may ask. Okay, so first point is nature. So what is the nature of this accounting system? It is an unscientific and unsystematic way of recording transaction, because as I told you already, when we prepare the accounts in this double entry system, we follow the dual aspect. But here it is not, that is called scientific system. That is approved by all over the world, recognized all over the world, and all the organizations, they follow the same principles. So here it is unscientific and unsystematic. Not there we follow the system. First journal entries, then ledgers, then trial balance. From the trial balance we prepare the final accounts. But here no, they may maintain some books. We have studied already what are the books that they maintain. Cash book and the personal accounts of customers and creditors. So only this many accounts they maintain. And here they do not follow the accounting principles and accounting standards. That is the nature of this accounts from incomplete records. Because it is not a complete record. From the name itself we can identify, we can understand. It is unscientific and unsystematic way of recording transactions. Because they never follow the accounting principles and accounting standards which are followed all over the world. Understood? The second point is types of accounts. So from the beginning we are learning what are the types of accounts that they maintain in single entry system. First one, cash and personal accounts are maintained fully, and some of the real accounts and some of the nominal accounts are maintained, but the other accounts are not maintained, and some transactions are completely omitted. When I was explaining the meaning, I have explained this one, types of accounts. Then the third point, lack of uniformity. Because in the first point itself I have told you, because these accounting principles and accounting standards are followed all over the world. All the organizations, they follow the same principles, the same standards, same concept. But here some institutions, they may maintain some records, others they may not maintain. As per their needs and convenience, they maintain their own accounts, or some information they can get from their own memory. They can keep in memory. This person has to give this much amount, or that person has to give that much amount. From that he will prepare his accounts. That's all. So there is no uniformity among different organizations. Understood the third point, lack of uniformity. Then the fourth one, financial statements may not represent the true and fair view. That we have studied in 11th standard, that it represents a true and fair view, because we prepare the profit and loss account. Trading and profit and loss account. From the trading account we get the gross profit and we get net profit from the profit and loss account. So that will be true and fair. That means the correct, accurate amount we can derive. We can get that the profitability of the concern will be accurate and correct. And the financial position of the business organization. From which account we prepare, we get the financial position. From trading and profit and loss account we find out the profitability. We ascertain the profitability of the concern, and that financial position can be ascertained by which account? The last one, the balance sheet, isn't it? From the balance sheet we ascertain the financial position, whether it is sound or very weak, we can ascertain. So here the financial position cannot be ascertained, because to write the balance sheet we need the assets and liabilities. But here the assets and liabilities are only the estimates. It may not be accurate, because depreciation we never find out, and we never calculate, and we never enter in the books of accounts. So it may not be true and correct. So both the profitability and financial position of the business concerned cannot be ascertained and it accurately. Understood? The fourth point, financial statements may not represent true and fair view. It may not be true and it may not be fair and it may not be accurate or correct. Okay? The fifth point is suitability. So, which organizations can follow this accounts from incomplete records? From the meaning itself, we have learned only the small sized sole traders organization and partnership firms, it is suitable to prepare this kind of accounts. But the joint stock companies or the banks or big financial institutions, they are asked to prepare their final accounts. Maybe the prescribed form will be given in the Companies Act. As we have learned in the introduction, the section 128(1) has given a prescribed form. As per that form only they have to prepare the final accounts. But here they can follow in their own way. So only it is suitable for small sized sole trading concern and partnership firms. And the last point is mixing up of personal and business transactions. That we have learned one concept, business entity concept. The first concept in 11th standard. Do you remember? Business entity. What is the explanation? What is the meaning of business entity? The business is different from the owner. He is separate from the business. All business transactions may not be mixed up with his personal transactions, isn't it? But here in this single entry system, they mix up the personal and business transactions. For example, if he purchased some goods for his household purpose, he may enter the same expense in his business. So he may mix up his business transactions with the personal transactions. Understood now? The features, shall we recollect once again from the beginning? The features, first one, nature. So what is the explanation of this one? It is an unscientific and unsystematic way of recording transactions because they never follow properly the accounting principles and accounting standards. So that is the nature of this accounts from incomplete records. Then the next one is types of accounts. Cash and personal accounts are maintained fully, but real and nominal accounts are not maintained fully, partially they are maintained, and some transactions are completely omitted. Understood? Then the third point is lack of uniformity. There is no uniformity among the principle that is followed among different organizations. They record their own transactions as per their needs and convenience. Each organization, it may vary. That is why lack of uniformity. The fourth point is financial statements may not represent true and fair view, because we know what are the financial statements, trading and profit and loss account and balance sheet. Here we are not able to prepare the trading and profit and loss account because we do not have all the particulars. All the transactions are not entered with the double aspect. So we cannot prepare that trading and profit and loss account. Then financial position also cannot be true and fair view because we do not have the details of all the assets and liabilities fully. Some will be there, that also may not be very correct because, for example, the asset if we enter, we never calculate depreciation under this system. So it will not show the correct position. Then suitability. So this accounting, this system is suitable only for small size sole traders and partnership firms. Very small size, but big the big size, the great size sole traders, they will follow only the double entry system and partnership firms. Then the last point is mixing up of personal and business transactions. With the personal transactions of the and that the proprietor will be mixed up with the business transactions. Example, if he purchased some articles for his household purposes, he may enter that expense as business expense. So there are many chances for mixing up of personal transactions with the business transactions. I think you might have understood the features clearly, isn't it, students? Whatever I teach you, and if you have any doubt, or if my voice is not audible, and the way I explain, if you do not understand anything, you can send the message through the WhatsApp to me. Understood, students? I think you all must be benefited from my teaching. The same chapters may not be explained later, even if the school reopens. Okay? Shall we go to the limitations of accounts from incomplete records? Okay. There are 6 limitations in single entry system. What is the meaning of limitations? The demerits. They may ask you in another way, what are the demerits of single entry system or accounts from incomplete records? Understood? So what are the limitations? You yourself will be able to say many limitations, isn't it? The first one is lack of proper maintenance of accounts. We have already learned they never maintain all the accounts. Only cash and personal accounts are maintained. Then some real and nominal accounts are maintained, and some transactions are completely omitted. So, and in the first one we have studied, it is unscientific and unsystematic way of maintaining records. Okay. So what is the first limitation? Lack of proper maintenance of accounts. Only the real and nominal accounts are not maintained, only the cash accounts are maintained, and some transactions are completely omitted. So it is an unscientific and unsystematic way of maintaining records. What is the next point? Difficulty in preparing trial balance. So we have learned that we never maintain all the accounts. So we are not able to prepare all the journal entries. We never post in the ledger. So we are not able to prepare the trial balance. So if the trial balance is not prepared, we cannot check the arithmetical accuracy of the books of accounts. You know, when we studied this trial balance, I have taught you this arithmetical accuracy. Arithmetical accuracy means whether what all the calculations that we have done is correct. If the trial balance tallies, so that is concluded that almost our calculations are correct. But that we cannot check in this single entry system. Understood? Difficulty in preparing trial balance. Third point is difficulty in ascertaining true profitability. In the feature itself, we have learned that financial statements may not represent true and fair view. We have studied the same thing. So it is difficult in ascertaining the true profitability because the trial balance is not prepared. Some of the transactions are omitted. So the profit may not be true. Understood? What is the next point? Difficulty in ascertaining the financial position. As I explained already in the feature itself, since the assets and liabilities that we derive from this single entry system are not correct, not accurate. So the financial position of the business concern also may not be correct. So it is very difficult to in ascertaining the financial position of the concern. Understood? Then the next point is errors and frauds cannot be detected easily because only the partial records are available and we cannot have internal check when they maintain the accounts. Internal check I have taught you, but you may not have I think listened, because internal check means one person's entry will be automatically checked by another clerk only if there is proper maintaining of accounts. Here maintaining of accounts itself is not clear, not maintained properly. So each clerk, not maybe only one clerk, or the sole trader itself will be the clerk, manager, the accountant, everything will be. So here we cannot check the errors and frauds which is done by the proprietor because he is the one who is making error and making fraud. Nobody else can come and check them. Okay, so errors and frauds cannot be detected easily. Then the last point is, it is unaccepted by government authorities and other authorities. For income tax purposes, these records are not accepted by the government or by any other financial institutions. If we go to get loan from the banks, they never accept the accounts from incomplete records. Only if we maintain the final accounts as per the rules and regulations, they will accept. So it is unaccepted by the government and other authorities. Understood? Any for legal authorities also, for any tax purposes or sales tax or income tax purposes, the authorities never accept this records. Understood? Shall I explain these limitations once again? The first one is lack of proper maintenance of accounts. Here they maintain only cash accounts fully. Some are the real accounts and nominal accounts are maintained partially, and some transactions are completely omitted. Some of the nominal accounts are completely omitted. So it is called unscientific and unsystematic way of maintaining records. Second point is difficulty in preparing trial balance. Since we do not prepare all the accounts, it is very difficult to prepare trial balance. So since the trial balance is not prepared, checking the arithmetical accuracy is also very difficult. Then the next step, ascertaining true profitability. So that is the third point, difficulty in ascertaining true profitability. From this partial records, we cannot prepare trading and profit and loss account, and even if they will calculate the profit, but that profit will not be true profit. And the next point is difficulty in preparing financial position. Financial position is ascertained by preparing the balance sheet. Here the balance sheet is prepared with the assets and liabilities of the business concern, which are not calculated accurately because they only with the estimates and with the cost price they calculate the assets and liabilities. So from this one they cannot ascertain the true financial position of the business concern. Then errors and frauds cannot be checked because only one person maintain the accounts and he may be the proprietor. So any other person cannot detect his errors and frauds that committed by him. So errors and frauds cannot be detected easily. Then the last point is, it is unaccepted by government authorities and other authorities because only the government authorities and all the other financial institutions, they accept only the accounts which are prepared under double entry system will be accepted, but not these accounts from incomplete records. So all these are the limitations. Understood, students? All these are the large the 3 marks question or 5 mark questions answers. So you have to learn thoroughly this one. And the last time I will mark all the question answers. Okay. Okay, student. Shall we switch on to the next heading? Differences between double entry system and incomplete records. We have learnt everything, what is double entry system and what is incomplete records. It is very easy to differentiate these two, double entry system and incomplete records. What is the first basis? Recording of transactions. Under double entry system, both the debit and credit aspects of the transactions are recorded. Understood? Both debit and credit aspects are recorded. Of the transactions are recorded. Understand? Under double entry system. But under incomplete records, both debit and credit aspects of a transactions are not recorded completely. Understood? Both debit and credit aspects are not recorded completely. Some transactions are entered fully, some transactions are entered partially, and some others are omitted. Understood? I have written short because we have written and we have learned this very well. That's why I have written in short. Understood? First point. Recording of transactions. Both debit and credit aspects of a transaction are recorded under double entry system, but under incomplete records, both the aspects, debit and credit aspects, are not recorded completely. Some aspects, for some transactions, both the aspects are recorded fully. For some transactions, they are entered partially, and some transactions itself omitted. Understood? The second point, type of accounts maintained. We know under double entry system, we maintain personal accounts, real accounts and nominal accounts fully. But under incomplete records, only personal accounts and cash accounts are maintained fully, and real and nominal accounts are not maintained fully. Understood? I think it is very easy. Type of accounts maintained. Personal accounts, real accounts and nominal accounts are maintained fully. Here under incomplete records, only personal and cash accounts are maintained fully, but real and nominal accounts are not maintained fully. The third point is preparation of trial balance. Preparation of trial balance is easy under double entry system. So, arithmetical accuracy of the entries can be checked, can be made. But what's the opposite is in incomplete records. It is difficult to prepare trial balance. So, arithmetical accuracy cannot be checked. Understood the third point? What's the fourth one? The next one, determination of true profit or loss. After the trial balance, next step is preparing trading and profit and loss account. So, trading and profit and loss account can be prepared. So, we can find out the profit or gross profit and net profit of the business concern. So, this cannot be prepared under incomplete records because we do not prepare trial balance. So, we cannot prepare trading and profit and loss account. Understood? Then the next one is determination of financial position. So, after preparing trading and profit and loss account, we prepare balance sheet. So, balance sheet can be prepared. So, we can determine the financial position. But balance sheet cannot be prepared under incomplete records because we have learnt already these assets and liabilities are just estimates and they are not complete and accurate. Understood? This determination of financial position, balance sheet can be prepared so we can determine the correct financial position. Here balance sheet cannot be prepared because the assets and liabilities are just estimates and incomplete and inaccurate. Understood? Then suitability, we have learned already. It is suitable for all types of organizations, double entry system. It is suitable for small sized sole traders and partnership firms. Then reliability. Reliability, it is reliable. Reliable, you know the meaning. We can rely on someone. That means we can depend on. So, reliability, it is reliable because it is systematic and system of bookkeeping because it is based on the accounting standards and principles. They follow the concepts, accounting concepts, standards, principles, procedures, everything. All over the world they follow the same system. So it is reliable. But this incomplete records, it is not reliable because it is unscientific and unsystematic system of bookkeeping. The last point is acceptability. It is accepted by government authorities, tax authorities and financial institutions for any loan purposes or for any financial assistance for anything, tax purposes, it is acceptable. But these incomplete records are not accepted by government authorities or tax authorities or financial institutions because it is not as per the accounting standards. I think you might have understood. Once again you need me to explain? Okay, I will just tell you. First one, recording of transactions. It is in order, you see, recording of transaction, type of account, trial balance, then profit, then financial position, balance sheet, then suitability, reliability, all this lity. Okay, suitability, reliability, acceptability. Okay, what are the recording of transaction? What? Just two aspects you have to remember. Both debit and credit aspects of a transaction is recorded. Here, both debit and credit aspects are not recorded completely. Some transactions are recorded completely, some are recorded partially, and some are omitted. Second one, type of accounts maintained. All the three accounts are maintained fully. Personal accounts, real accounts and nominal accounts. In incomplete, only personal and cash accounts are maintained fully. Real and nominal accounts are not maintained fully but partially. Third one, preparation of trial balance. Trial balance can be prepared so we can check the arithmetical accuracy of the books of accounts. Here, it is difficult to prepare trial balance, so we cannot check the arithmetical accuracy of the entries. Then a fourth point, determination of true profit or loss. We prepare trading and profit and loss account, so we can determine the true profitability. Here, profitability cannot be ascertained because we never prepare trading and profit and loss account. Then financial position. Balance sheet can be prepared. We can ascertain the financial position. Here balance sheet is not prepared because the assets and liabilities what we have are just estimates and it is incomplete and inaccurate. Suitability. It is suitable for all types of organization. It is suitable for only small sized and sole traders and partnership firms. Then reliability. We cannot rely on this. We can rely on this double entry system because it is systematic and scientific system of bookkeeping because it is based on accounting standards and principles which are accepted universally. But here it is not reliable because it is unscientific and unsystematic way of keeping books of accounts. The last point is acceptability. It is acceptable by government authorities, tax authorities and financial institutions for any financial assistance or for any tax liabilities. But these incomplete records are not accepted by government authorities or tax authorities or any financial institutions because they are not as per the accounting standards and principles. Okay students, you might have understood. Usually they will ask the differences for 5 marks. In accountancy they never ask, but rare they may ask for 5 marks or from some points for 3 marks question. So you have to learn correctly. So whenever I teach you, you can keep the books also in front of you. I hope you might have bought the books from the school. If you have not bought till now, better try to buy the books by paying some fees. Okay students? Okay, now we can mark the question answers. Okay students? The very short answer, first question, what is meant by incomplete records? You write the page number there, page number 2. Under meaning of incomplete records, the first paragraph. When accounting records are not strictly maintained according to double entry system, these records are called incomplete accounting records. This is 1 point. Usually they will ask for 2 marks. So 1 point, then second point. Generally, cash account and the personal accounts of customers and creditors are maintained fully, and other accounts are maintained based on necessity. These 2 points you can write as first one. Second one. State the accounts generally maintained by small size sole trader when double entry system is not followed. Page number 2. Page number 2. Type of accounts maintained. In general, only cash and personal accounts are maintained fully. First point. Then second point, real accounts and nominal accounts are not maintained properly. Some transactions are completely omitted. You can write these 3 points. Then third one, what is a state? This one we have not come. Okay, leave it. Then short answer. Number 1, what are the features of incomplete records? These questions they may ask for 3 marks or 5 marks, whatever it is. Okay, if it is 5 marks, you have to write all the 6 points. So, better you learn all the 6 points in page number 2. All the points you mark. All the 6 points you can mark. Okay. So, from here till here. Roman number 3, 1. In first point, it is an unscientific and unsystematic way of recording transactions. 2 points. Then this one you are learning. Then lack of uniformity. First point you can write at least 1 point. Then financial statements may not represent true and fair view. Then only 1 point, full big point I think. Okay, this point you can write. Then suitability. The last point you can write. If you consider it is very big, only this point is the important. Then mixing up of personal. This one also the first point. Enough. Okay. 5 mark means you have to write all the 6 points. If it is 3 mark, you can write 3 or 4 points. Understood? Then the next question. What are the limitations of incomplete records? Limitations, there are 6 points. Okay, from here till here. Page number 3. Okay. Here also you can write all the points, and here these 2 points important. Trial balance. Here also 2 important only. Okay, if you don't need 1 point, you can cut short. Okay, then frauds, errors. Here the last point you can write. Okay, then the next question, differences between double entry system and incomplete records. Page number 4. Here I have explained you. On the screen you can see. From there you can mark all the points that I have written there. Otherwise you read here and write. For 5 marks at least 6 points you have to write. Okay, all the 8 points are easy only. Okay students, so you whatever doubt if you have, you can ask me, you can convey all the any complaints or doubts, anything if you have, you can send it through the WhatsApp in my mobile number or in the group that we have already opened. Understood? So we have completed today's portion. So better you learn your daily lessons, otherwise it will be difficult for you, because accountancy, unless you learn the theory portion, you cannot do the problems easily. So from the next class onwards I am going to start the problem. Okay students? Okay, thank you very much. Do well. Learn well and be healthy. Thank you.